Hello, everybody, and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. Before we dive in, standard disclaimer: nothing here is investing advice. Do your own due diligence. And today's guest is a former member of the CME with 40 years of experience trading commodity futures and currencies on the FX market, and is a trading coach for TradeGateHub.com and host of Face for ForexAnalytics.com. It's Mr. Dale Pinkert. It's an honor to have you on the show.
It's great to meet you, Jesse. So I appreciate being here with you and your viewers. Hope I add some value today.
Awesome. Appreciate having you on. Let's get started, like I do with all new guests, with the origin story. So, how did you first discover investing and trading, and how did that lead you to the commodities, futures, and FX markets?
It all happened at once. I had graduated from Northern Illinois University, which is a DeKalb, Illinois, in the middle of the cornfields. I had no idea I would ever be trading corn. And I want to touch upon the grains today because I think there's a special situation with the Grande El Nino. There was a recession going on in 75, and I was looking, you're out of the nest, the easy days of college, and no cares, no worries were over, and it was time to make your way in the world. And there really wasn't anything that interested me that I had offers for, insurance companies, mainly sales positions. And I grew up in an area in Chicago in the suburbs where some of my friends and many of their fathers were involved as traders at the Chicago Mercantile Exchange. So a friend of mine invited me to come down and check it out, and he was going to sign me on so I could go on the floor and talk to people. And it was really kind of a funny story because I took the L down there and I got off at the wrong stop and I thought I was at the Merc, and I'm walking around and asking people where the trading floor is, and they're saying, "Well, young man, this is the merchandise mart where wholesalers have their showrooms." So I knew I was in the wrong place and got back on the L and ended up finally at the Merc in the gallery, and what I saw looked chaotic and fascinating at the same time. The big pit in those days was the pork belly pit, and all the locals, their arms were up in the air, and it was a fast market. And my friend Gary came and got me a guest pass, so I went around to each desk. At that time, orders were filled by calling them in or wiring them in. So I went around to every desk and said, "I really don't care what you pay me. I want to learn this business." So I was hired as a runner for Dean Witter. And that's the beginning of the long and winding road of my career at the Chicago Mercantile Exchange. In fact, for currency traders, they just started trading currencies at the CME, the old one above Union Station. It was called the IMM. And at that time, they were actually trading off chalkboards where they would write the bid, write the offer. So I've seen the whole evolution of the industry from the beginning of futures. They were trading IMM gold then. And being a runner, I found out and I was curious why the guys I was handing the orders to had a special interest in orders that had STP at the end of it. So that was the stops. And when they ran stops on the floor, there was actually an audible roar on the floor because they were, running buy stops or sell stops. And I also noticed that at times that frenzy ended up putting in at least a temporary higher low. Therefore, the handle later in my career, Forex Stop Hunter. I still believe that they happen. They're done by algos now instead of open outcry. And that's one of the things I teach is not to place your stops in obvious places like a pip above a swing high or low, because stop hunts still happen all the time. and people end up getting picked off, right the market, wrong the trade, because they're not giving enough breathing room and using too much leverage. So they tighten up their stop. And, I have a belief that if you're a swing trader, if you can't be wrong for a day, how can you be right for several? So that's my Genesis story. And then from there, floor trader who I took a course at the Merck Technical Analysis. So my Bible in trading was Edwards and McGee technical analysis of stock trends. People still talk about it. I took the course and he purchased a seat and was down on the floor trading lumber. I was upstairs servicing his client book. And from there, I moved to LA, a branch of Madoff and Sons, and have had my own IB uh, for many years. Pinker Commodities was my IB, and reinvented myself over the last 10 years as a content provider after the brokerage model really was broken by the internet and people wanted full service for discount prices. And I was pretty good at promoting myself and getting interviewed on radio and TV, including a few spots on CNBC and FNN, which was before CNBC in Los Angeles. And so I had the idea, who better to ask the questions than someone who's been asked the questions? So I also do what you do, Jesse. I've interviewed some of the best minds on the planet. And I don't know about you, but I've learned and actually have become better through my interactions of interviewing people. And it's actually intelligence gathering for me, because there are people whose work I really respect. And, I see how it fits into my narrative and what I'm looking at. I advise everyone out there not to take anyone's trades blindly because they're never going to learn. If it perhaps lines up with their work, that's a different story. But my hope for all traders that I've worked with is that they're not dependent upon me or anybody else, but independent of everyone. And that's my mission. And I've actually seen it manifest where the student has become the teacher for me, and seen them begin to mentor other people with some of the methods that they learned from me. So that brings you up to date to where I'm at now.
That's awesome. And yeah, I definitely agree. Doing interviews like this, in my case with people who have far more knowledge than I do, it definitely accelerates the learning process and gives me lessons I can also apply when I'm investing as well. So I do want to dive into commodities as well as currencies with you, but before we do, I'd like to get your view on the broad market because the S&P and Nasdaq are currently being held up by a small group of tech stocks. We have media outlets proclaiming the start of a new bull market. There's this whole mania, it seems, around AI that, in my view anyway, seems to harken back to the dot-com bubble. So, is this a sustainable situation in your view? Is this really a bull market, or is this something else?
I'll go with the something else camp, Jesse, and I'm very bearish for all the reasons that you mentioned. And there have been a few things that have happened that have lit up the market, and it's mainly been tech. So let's call it just like the NCAA's, the Elite Eight, including Apple and Microsoft. And I'm actually beginning to see some cracks in some of the leadership. So, I'll just give you a few examples. Semiconductors led the way, and I'm looking at a potential three drive to a top formation or a right shoulder. What has me most concerned, and people whistling past the graveyard, are the banks, which have not participated at all. And it's almost like what happened in March, people feel has been resolved. And when I look at the regional bank ETF, that's not the way it looks to me. Here's KRE. I'm looking for another low. I teach a three drive pattern and it looks incomplete to me. And I think that this low could really almost get all the way back to the COVID low. So I'm uh, I'm in the camp that even though the market doesn't talk about it anymore, that we're still going to have some banking issues and more than banking issues coming up as the regionals are under pressure and even the big guys tighten up lending standards and we begin to have a credit crunch, especially corporations that have to roll over debt. Um, a lot of sovereign debt's going to come to market. There's going to be now solvency issues. So I actually have targets in the regional banking ETF all the way back to the COVID lows. So I'm not a believer that we're in a new bull market. I think that we're going to take out the lows of last October going into the end of the fall, which is a very contrarian call right now because, I'm starting to ask myself if the melt up guys are right, looking for, 5,400 and 6,000 this year before we have any kind of sell off. But I just want to show you one of the major leaders in this rally has been Microsoft. And just to show you that there are some cracks in it, um, the Nasdaq, it looks like it's forming a right shoulder here, and and this has been one of the leaders. The other leader, the star of the show, has been Nvidia, and Nvidia may have one more shot up for a three drive as well. AMD had a very, I don't think we're going to make new highs in AMD. And the most loved stock on the planet, I'm short and underwater on, is Apple, which is still diverging. Apple's making new all time highs. This is what people consider to be safer than a bond by most. So, being a contrarian, it's the one still showing the most relative strength. But I'm thinking that if we get a break under 180, that then we're looking at 170, and back under 170, it opens a door for big declines. And so I guess we could sum it up that I'm pretty bearish equities here and don't believe that the VIX, maybe there's one more push lower in the VIX, but to me it looks like it's starting to round out a bottom and there's just too much complacency, including, if tanks had showed up in the streets of Moscow, we'd be looking at a different market. So just like everyone thinks the banking problem, solvency with people buying paper when the 10-year yield was under 1%, and European banks paying to own bonds when they had negative real interest rates, pension funds being loaded up with this paper, that I think there are plenty of problems ahead.
Yeah, absolutely. I definitely agree with your view there. And it is crazy how people are looking at stocks like Apple and these other blue chip tech stocks as risk free assets that only go up. So it'll be very
And they've
interesting
been
to see
right
how
so
things
far.
unfold. Yeah.
So they've been right so far. So we've actually achieved objectives in Apple. If you look at a daily, um, and objectives can be overshot on both the upside and the downside. So here are the lows around 125, and then we had this major breakout at 56, tested it once. So that was $32. $32 from 56 gives you 88. And that's where we are. We're right around 88 right now. In fact, above it at 89.34. The S&Ps, I don't think will make a new high. I think we could have a failing rally here. Looking at the 4 hour. And I think a test, maybe we trade 44, 44.20, but I think a test of 42.50 to 4200 is coming. Even if you're bullish, I'd be waiting for that 10% pullback to be a buyer. And I think that we're putting in a high there. And we also could be putting in a high in NASDAQ under 14.4 changes the whole picture because we'd be taking out a wave four of lesser degrees. So I guess you could say that I'm looking for the opposite of what the majority are looking for in the market. And I think July could be the month that sets it off, and July will be the month that'll tell me if my narrative is right or wrong. And I'm looking for some pretty good downside in July, after the end of the quarter.
Right. Well, let's shift to commodities now. And I want to start the commodities conversation with copper. You noted recently that it made another lower high. So do you see a continued price decline up ahead for copper? And what do you see when you're looking at a more long-term horizon, say in the next 5 years or so? Because there's a lot of talk about copper shortages and a lot of other fundamental drivers, the fact that there's very few producing mines, the time and expense required to bring one online, the whole narrative behind the new green economy and all that stuff. So give us your take on copper.
Okay, well, I think that we're uh, headed lower in copper for now. Although everything you said prior is correct, takes forever to have a copper mine. But you look at the numbers that came out of China yesterday, growth is slowing in China. Growth is going to slow in the U.S. There's a saying that all bull markets are roofed in copper. And if you look at the daily, we keep having lower highs. We had a breakdown here, recovered, and I'm looking for new lows. I think it's very possible that we could see three and a quarter, $3 copper again. And a lot of what I'm talking about is predicated on a risk-off event when the market moves from everything's okay to having a growth scare. And so that's also the copper is a metal that's about construction, right? It's used in buildings. It's used in, people will go and steal the copper out of a building and sell it. So copper is about construction, and gold and silver are about destruction, debt destruction to be specific. So negative copper, it kind of goes along with a sell off that I'm looking for in stock indices and a risk off event that I think can be compressed in time. The meat of most declines is 6 to 8 weeks once it gets going. So if we peaked in the S&Ps last week, we're talking about late August, early September for it completing the first wave down of this sell off. But copper looks negative to me.
Okay. So what are your thoughts on the oil and gas space? Sentiment in the sector is very low at the moment. WTI crude got a lot lower than a lot of people thought it would. It does seem like the long term fundamentals are there. How do you see energy performing here in the remainder of 2023 and beyond?
Well, there's some big numbers under 62, $58. This too is part of a deflationary scenario, but I'm looking for longs for the first time in a long time. It could be from here. Sometimes I look for one more jiggle. I thought we might retest this three drive line here under 62 and a half, maybe trade upper 50s. But I'm now beginning to get interested in the long side of crude and definitely interested in the natural gas that people have been trying to bottom pick forever. And I think that we're coming out of the bottom. We bottomed in natural gas, and the weather that Europe had last year, I don't think they could count on again this year. So I'm looking for sharply higher natural gas prices. Probably more constructive natural gas than WTI.
So let's talk gold here. The bullish headlines, there's a lot of them these days. Central bank gold buying, talk of a monetary reset, the BRICS nations potentially creating a gold-backed currency, eroding trust in the banking sector, etc. All of those things you hear gold bugs talk about. Are these real catalysts in your view? And what are you seeing from a technical perspective when it comes to gold?
I think you have to pay attention to the dollar. But here's your daily gold chart. I am expecting uh, a rally to maybe 1980, 2000. But if I'm right and there is a risk off event, I think that takes everything down, just a matter of different degrees. And I actually think that what would really set up the gold would be taking out 1800 by a little bit sometime later in the summer, maybe August, September. But we could first get a rally in gold back to maybe 2000 and get a rally in silver, which is outperforming based upon the XAU. Gold silver ratio looks negative and heading lower. So silver's a preferred long right now, and maybe silver gets a rally all the way back to 25, but I think there will be a chance sometimes later in the fall to look at silver at 20. And I also cover the miners. So GDX, I have a target down around this 27 level, 26 level in the coming weeks or months for the GDX. And some of the silver stocks I like are a couple of these miners. Let me give some silver porn to some of the silver squeeze guys out there. This is Fortuna. I still think I'm going to have a chance to buy it lower, maybe at 61.8, maybe 78.6. It could rally first to 340, but I'm thinking late summer for the miners. And here's why I think this could be such a huge trade once silver really starts to gain momentum and accelerate, probably next year. So here's your monthly chart. Okay, so we've held the $2 level, and I think we will. And we were contained at 4. And but if you look at the whole long-term chart going back many years, it's a rectangle. And a rectangle, are we going to break down here and go to -5? I don't think so. I'm bullish silver. Um, so I'd be buying this on weakness. Next close over 4 gives us 6. But if we ever break out over this level, 985, you could be looking at 17, $18 on Fortuna breaking out of this massive sideways channeled rectangle. So I think it could do this in the next few years, break out over this $10 level. And it's just a simple arithmetic count that would take you to 16 to $18. Just you measure the range and then you tack it on top of the breakout. So I think the white metals are really going to outperform gold. So I'm also looking at platinum. I don't think it's ready, but I think that maybe $100 lower in platinum, maybe down here around this 800 level. Um, I'd be looking at platinum, and some people might even be interested in looking at the spread because I'm old enough to remember platinum trading at times over $1,000 premium to gold, not discount to gold. So that just tells you, if we revert to the mean, that there's big money in being long platinum, short gold once we get down there.
Well, let's talk long term treasuries now, because you said in a recent interview that you think the long term treasury bond ETF TLT is a buy over 104 and an add above 110 for a move to 120. I had Hugh Hendry on recently. He was also bullish on long term treasuries. Is this more of a short term trading opportunity you're seeing, or could this be a longer term trend?
Well, uh, I what I see is it's going to be a flight to quality, the way the bonds used to work. Um, so, that's what I'm looking for. Let me just adjust this somewhere. Okay. So 104 has contained it. All right. And you see the moving average here. And then you have an ascending triangle that's developing here as well. So there you go. Back to normal. So down here, I was looking for 104. Short term, it's contained it. Over 104, just take the arithmetic move of four handles, okay, and tack it on above 104, and that's going to get you to the weekly resistance, which comes in just a straight line prior low 109 and a half. And I think 120 is very doable. And this is also part of a narrative of a risk off event happening where, if you go back to, 2021, in fact, until October of last year, they led the market lower. Okay. Rates led the market lower in 21. They've stabilized, and I think that there's a bear market rally, which could also help some of the regionals that have duration risk. A bond rally, maybe they could do something about their positions and maybe do something about duration if we have a bond market rally. And just to take you to yields, and you look at the 10-year, I have a very important level here at 360, and that'll be your first sign that 10-year yields are on their way down. Here you go. Here's your 360. And, with the way the yen is acting, we should already have broken out to the upside because there's a very tight correlation between the US dollar yen and yields, and we haven't been able to do so. So under 360, it's going to measure 330, and under 330, I think we could see 10-year yields maybe 280. And compressed in time and happening during a stock market sell-off. So this too is part of my narrative of risk off, and the bonds playing the role they traditionally held. I mean, we had a pretty good rally in the bonds during the 3-day banking crisis. TLT rallied big with crypto. So I'm looking for lower yields, but price is king, and 360 will be your, probably up here 370, and then 360 is going to tell you that 330 is in its sights, and under 330, we could be looking at under 3% on the 10-year yield. Over 385 now, 390, then you're looking at, new highs in yields. But I think first we're going to get a break, and then later on, yields start to head back up and to higher highs than the 430 here. So again, a market event compressed in time, lower yields during that event, pressure on things like metals during that event, especially copper, and then you get your shopping list out for Christmas and buy things that got cheap during that time frame.
So you mentioned at the top of the show you wanted to touch on grains as well. So fill us in on what you're seeing there, and are you looking anywhere else in the agricultural commodities, potash stocks, anything like that you think also might perform well up ahead?
Yeah, I think anything that has to do with growing food is something that you should pay attention to. But I think there's a unique opportunity here in the grains because look at where we were. on the invasion. This was wheat, got up to $13. Recently, trying to bottom here under 6. Same situation with beans. Beans actually have the most relative strength, and we have a grande El Nino in the Pacific, which can lead to dry conditions to buy the crop. And let's finally just take a look at the corn, which is probably the weakest technical structure so far. But I like the beans. On a pullback, I think we're just getting a normal pullback after a pretty big move, right? This was the end of May. So, in a month, right, we did this. And to me, this looks like, just a corrective decline. I'd be a buyer of the beans, anywhere around 1400, 1380, looking for sharply higher levels. I don't think that conditions are going to get any better in the wheat, especially with what's happening in Ukraine. It's a major breadbasket, and let's just pray that they don't do anything to damage that nuclear plant in one of the biggest breadbaskets on the globe, which would make that land unfarmable for decades. So I like the wheat as well. Any break between here and 640, and you have to risk the lows. And you know what, Jesse? You can't eat gold and you can't print corn. So this is something the Fed has no control over. This is Mother Nature. Maybe a strong dollar might depress it, but when people talk about a super cycle bull in commodities, I think they're talking about food. So, we've had every other horseman ride, right? We've had a plague, we have war. So I guess the next thing is famine. So, I've been telling people build your own silo, fill it up with wheat, and you'll be like Joseph. When people are hungry, you'll be able to help them out. So, very constructive on wheat and beans. A lot of people don't look at it. And I do believe they have ETFs to be able to trade it too if futures aren't your forte.
Right. Okay, great to know. I would like to finish here on currencies, as that is one of your areas of expertise. So, you touched on it earlier. There's a lot of talk of de dollarization going around. How do you see the US dollar performing up ahead? And is there any currencies you currently see opportunity in?
Well, today, the yen has exceeded my targets initially. I think there's a pullback coming in US dollar yen, and then perhaps we trade up to 49. So maybe the yen will catch up with my ideas about dropping yields. I think there are a couple jiggles setting up. I like the euro pound long term. I think that the euro is going to hold up better than cable. It's been under pressure for a long time, but I think we're going to have a nice weekly signal. So if you look at this on a weekly, we've just retraced a corrective pattern, and I think we're on our way first to 87 and a half and then higher. So the way I'm looking at euro right now, Jesse, is I'm a buyer on a pullback towards the 108 level. Here's the 4 hour down here. I don't think we're going to new lows right away. So I'm a buyer in 108, and I could make a case that the euro could rally to 112. There you see the weekly 200 week moving average coming up here around 112. And then that would be a third drive. And perhaps by then, the stock market is in decline and we'll get a bid back in the dollar because that's a wrecking ball. And despite all the talk of de dollarization, when there's blood on the streets, people buy dollars. So if I'm right about a sharp decline in equities, and I'm talking about initially just a correction to 4,200, but um, I think that we could trade 3,200. I'll just show you the weekly on where I think the S&Ps eventually can go. I, in fact, okay, here's the line on the weekly. I think we're going to 3,200. And if that happens, you're going to see, bonds rally, most other things under pressure, and eventually a pretty good dollar rally. But in the meantime, I'm looking for the Dixie to trade back down under par after a little bit more of a bounce here. So maybe 100 pips. Maybe we go to 103 and a half, and then one more decline in the dollar that could take euro to 112, and maybe the pound, which is already stopped here, maybe one more high towards 131. The commodity currencies have been the weakness. If we have a rally if I'm right about the dollar, this too will be a nice short because of China and risk off. But eventually, I think that, around 62 or so, I'm going to want to be long, probably later during the summer, towards fall. I'm going to want to be long the Aussie down around the 62 and a half level or so. So that's my take. One more jiggle down in Dixie, and then I think that we could actually, on the euro, after we have one more rally to up here, retest parity. So there's a couple of trades setting up here. It's not a one-way street. One more push up from maybe 108 to 112, and then a pretty big break back down to parity in the euro.
Awesome. Well, thank you so much for joining us today, Dale. So much knowledge shared. I think people are really going to get a lot out of this. Before I
Good.
let you go yeah, tons of value. And for those who want to learn more, could you tell us about TradeGate Hub and Forex Analytics?
Okay, TradeGateHub.com is sponsored by a broker. We don't sell anything. It's a free room for traders to come in and share their ideas. I post there. I do live streams along with Mike Venezia there, so you can find our analysis, ask us questions, and at the most consider opening an account with TradeView Markets, our sponsor. And you could find me in another free spot. It's called FACE. It's called the Forex. It's an acronym for the Forex Analytics Community Experience, where I host a show going on 6 years, starting at 8:30 a.m. EST, where the team and I, the first half hour, break down what we're seeing in all the markets. You could watch it streaming on YouTube or just become an attendee in a Zoom room. And then I also do interviews 3, 4 times a week in there. And I do interviews as well on TradeGateHub.com. So a couple of places where if people are interested in what I'm thinking, they could come and check it out. No, they do sell subscriptions and have a prop trading program at Forex Analytics. So it's a great community they have there, and TradeGateHub.com is really a nice way for Tim Fury to pay back the trading community for his success he's had as a trader and owner of an international brokerage firm.
Great. Well, I'll put links to both TradeGate Hub and Forex Analytics in the description below for anybody who wants to check that out. Thank you once again, Dale, for joining us and sharing your knowledge with the audience.
Okay, so use less leverage, everybody, and let your stops breathe. And don't chase anything. Let the trade come to you. Thanks for having me, Jesse.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.